Hello, this is Rick Cortez with the February 2026 update on the Westwood Broadmark Tactical Growth Strategy. And so far this year, we're doing pretty well. Year to date, we're actually double the S&P 500. And over the last 12 months, we've captured a good deal of the S&P 500's return. And very importantly, we're beating the HFR long-short index, which is our peer group, and we've done very well against that over the last 12-month period as well. What's the reason for this? First, from a macro point of view, if you remember, last year, the market declined about 15% between January and April. We only had a 10 to 30% exposure at that time. The market bottomed in April, went up into the end of the year, and we increased our exposure to 65 to 75%. So all of that helped. But second, from a micro point of view, the reason is portfolio construction. We have allocated about a third of the portfolio to historically uncorrelated areas, such as gold miners, energy, and utilities. In addition, we further diversified the portfolio into the international area through use of the Eurozone ETF. In recent weeks, however, we have decreased our exposure and decreased our exposure to gold miners in particular due to poor relative strength. In addition, we are seeing some weakening in our breadth models, so we'll have to keep our eye on that. Our goal is to provide clients with reasonable returns and never lose more than 10%. And in our 23-year history, the tactical growth strategy has never had a drawdown of more than 10%. The strategy has allowed us to protect capital during the 34% decline in 2020 as the result of COVID, and it has allowed us to show positive returns during the bear market years of 2002 and 2008. Now, we don't predict, we adapt, and we don't know what's ahead in 2026. But we can tell you historically that the second year of a presidential cycle, which is where we are now, is usually the weakest of the four. So this is Rick Cortez. Thanks so much for joining me. Please join me in March for the next update.